Stock indexes on Wall Street falling for a second straight day Tuesday afternoon. Let's find out, how to hedge against inflation. For that, turn to Jeff Tomasulo of Vespula Capital. Jeff, good afternoon. Welcome back. But before we get to hedging, I want to first ask you about today's markets. Are the earnings that we're seeing so far good enough to justify the valuations? We've seen some bank stocks, for example, react negatively last week, despite the blockbuster earnings.
Yes, they had blowout earnings, but is it enough to really kind of drive the stock higher at these levels? And in my eyes, no. And this is why we're having a risk-off kind of day that we're seeing in the market. Now, this doesn't mean, in my eyes, that we're going to have a 20% correction. I think too many people have PTSD from the last sell-off that we had back in, the pandemic. But having healthy pullbacks, especially when you have the SPY on a 10-day, I think it went up 10 or something, 11 days in a row. And that is kind of, in my eyes, scary. And Fred, the other thing I think people are not paying attention to, which you bring up, is valuations, right? There are certain stocks and sectors out there that have gotten overheated now with good cause, I guess, because there's so much money on the sideline. So any kind of pullback that I see in the market is going to be a good opportunity to buy on the short term. On the long term, I think the next quarter of earnings is going to be really key.
Some of the guests on my show, Jeff, have mentioned commodities as a hedge against inflation, also an alternative to fixed income at a time when yields are rising. Do you see it that way? I know you've dabbled in commodities before, and if so, what commodities can you get into at this time? We've seen an appreciation in some of them.
Well, we've seen a massive appreciation over the last 12 months. I mean, if you think about it, I bet you could ask any best performing asset out there. Not many people can tell you that it's random length lumber. I mean, it's up over 75% for the year. In the last 12 months, it's up 278%. You look at soybeans, corn, and a lot of this happened after the election won, especially in the softs when you talk about corn and soybeans and soy meal, because of all the, what was going on with the Trump and China at the time. But it is also the demand that we're seeing from the reopening of the economy, right? You see that in oil. I mean, oil's had a tremendous up move over the last 12 months and, up over 70%. So when I hear the Fed talk about transitory inflation, I'm wondering how this is, I think, going to stay a lot longer here than a lot of people think, especially because we haven't even gotten into opening the economy in the United States. And when you look at Europe and the rest of the world when it comes to vaccines and when it comes to reopening their economies, they're so far behind us. So I think, these inflationary pressures that we're going to see, especially in commodities, are here to stay. Now, as a trader, I'm very price sensitive. So for me to buy lumber up here, absolutely not. For me to buy soybeans up here, no. But on pullbacks and consolidations, yes, I see some opportunities there to hedge myself.
So buy lumber and soybeans, but on pullbacks.
On pullback, I mean, for lumber, I don't know about that. The one thing about lumber is it's been up so much and so great that it would be so hard to buy up here. I have no idea, and it's putting pressure on. You think about this. If you're a home buyer, you're a home builder, your costs are going up. And where do you put that to? Who do you put that to? You put it towards the consumer who have to buy these houses that they're building to offset those costs.
So what ones are you recommending the investors buy on pullbacks?
Well, on the pullbacks, I would look at the soybean, corn, wheat. Those I like to be. We are trying to, on a short term, looking to short some oil because of the massive move that it's had. But again, you have to be just cognizant of, where they have been. I always talk about this all the time. You want to know where it has come from, where it's been, and then on these pullbacks, use some type of capital allocation to get involved.
And lastly, but quickly, little time left. Do you see a super cycle for commodities?
I think we're in the midst of that, right? And I think you'll see that over what I said before is, I think inflation is going to stay a lot longer than people think, just because of all the money that's been pumped into the system, all the money that's being spent right now by consumers, and we haven't seen any of that going on as much as we have in Europe, as much as we have in the United States so far. So yes, I think we're in some massive cycle that will stay with us for quite some time.
All right. Thank you, Jeff. Appreciate it. Our thanks to Jeff Tomasulo of Vespula Capital. I'm Fred Katayama in New York. This is Reuters.